Have you ever wondered why almost every country in the world is in debt? If debt is such a bad thing, why don't governments just pay it off and start fresh? And most importantly, who exactly do they owe all this money to? Today on Explain Why's 91, we're breaking down the global debt puzzle in simple terms. By the end of this video, you'll understand why countries borrow in the first place, who they actually owe this money to, and why debt isn't always as scary as it sounds. Unless it is. So let's start with the basics. Section 1. What is national debt? National debt is simply the total amount of money a government owes to lenders. It's like when you borrow money from a bank. Except instead of one person, it's an entire nation doing the borrowing. But here's the twist. Governments don't walk into a bank and sign loan papers. Instead, they issue bonds, basically IOUs that investors, banks, and even other governments buy. Think of it this way. You buy a $1,000 government bond. The government promises to pay you back in 10 years plus interest. That money helps fund their spending today. So in reality, national debt is just the accumulation of all those IOUs. Section 2. Why do countries borrow? Now, you might be thinking, why borrow in the first place? There are three big reasons. First, budget deficits. Governments often spend more than they collect in taxes. Instead of raising taxes, which is unpopular, they borrow to cover the gap. Second, investment in growth. Just like you might borrow for a house or business. Governments borrow to build highways, schools, and technology. Ideally, this makes the economy stronger, making it easier to pay back later. Third, emergencies. Wars, pandemics, financial crashes. These force governments to borrow huge sums quickly. For example, during COVID-19, countries worldwide borrowed trillions to support businesses and citizens. So borrowing isn't always reckless. In fact, some level of debt is completely normal and sometimes very useful. Section 3. Who do countries owe? Okay, the trillion-dollar question. Who do countries actually owe money to? There are two main groups. Number one, domestic lenders. Most debt is actually owed inside the country itself. That means local banks, pension funds, insurance companies, even ordinary citizens. In fact, in the US, about 2/3 of the national debt is owed to Americans themselves. So, in a strange way, the country owes money to its own people. Number 2, foreign lenders. This could be other governments, like China buying US bonds, or organizations like the IMF and World Bank. So, when you hear the US owes China money, it doesn't mean Washington borrowed directly from Beijing. It simply means Chinese institutions invested in US government bonds. It's not personal. It's investment. Section 4. Is debt always bad? Now here's where it gets interesting. Having debt doesn't always mean a country is in trouble. In fact, some of the richest nations like the US and Japan have some of the highest levels of debt. Why? Because investors trust them. Their economies are strong, their institutions are stable, and people believe they'll always pay back. It's just like credit. If you have a good job and a solid history, banks will happily lend you money, even a lot. But if you're unreliable, even small loans can be risky. That's why economists often look at something called the debt-to-GDP ratio, comparing how much debt a country has to the size of its economy. It's not just the number that matters. It's whether the country can handle it. Section 6. When debt turns dangerous. Of course, too much debt can be dangerous. Look at Greece in the 2010s. They borrowed heavily, couldn't pay back, and had to accept painful austerity. Or Argentina, which has defaulted several times. Or Sri Lanka in 2022, where debt spiraled into shortages and mass protests. Warning signs include spending more on interest than on education or healthcare, borrowing just to pay back old loans, and losing investor confidence when nobody wants to buy your bonds anymore. When that happens, countries often turn to the IMF for emergency loans,
which usually come with strict conditions. Section 6. Why debt will always exist. So, why is every country in debt? Because in today's world, debt is how economies run. Governments borrow to invest, to manage crises, and to balance budgets. And who do they owe? Mostly their own citizens, banks, and institutions. And secondarily, foreign investors and organizations. The real question isn't whether debt exists. It always will. The real question is whether it's sustainable. Managed wisely, debt fuels growth. Managed poorly, it can bring an entire nation to its knees. Section 7. Closing thoughts. So, the next time you hear about a country's trillions in debt, remember, it's not just about the number. It's about trust, stability, and management. Thanks for watching ExplainWise 91. Don't forget to subscribe, because here we turn complex questions about money, power, and the world into clear explanations.